Hey guys, what's going on? It is March 12th. Of course, all the headlines are about the failure of SIVB Bank. And the question on your mind is probably, well, who's going to save them? It looks like Fed says that there's going to be no bailouts. Well, so we're going to try to decipher what's actually going on here. But the bottom line is this. There's a much bigger question at stake here. It's not about who's going to save this bank or who's going to save the next bank that's going to fail or a dozen of others. But the bigger question is, who the fuck is going to save United States dollar? Okay, and who the fuck is going to save the Federal Reserve System that's been barely surviving, I would say, for the last 20 years. They've managed to create and engineer a path that is postponing this humongous crash that's been way overdue. But in reality, nobody can get away from printing money for over 50 years. There's not a country that's been able to pull it off. And this is the time where it's all coming to an end, whether you want to hear this or not. But there's certain things you can do. Definitely, if you're a trader, these are some great trading catalyst for you to prosper. While the other people are going and whining and bitching how everything is coming down and crashing, this is an opportunity for you to set yourself free. So in this video, I'm just going to briefly mention some of the easiest trades that you could be taking as a short seller. But if you absolutely have to be a bull, even in this crazy market conditions, I will outline two specific things that you could be buying right now. They're going to put a ton of money in your pocket in not so distant future. You can be buying them outright. You can be buying call positions on them. But we're going to discuss some of the easiest trades that are transitioning right now as a result of some of these major catalysts. Now, also in the last video, I have mentioned that by summertime, Federal Reserve will be cutting rates instead of raising them. So at this point, this moment could arrive much sooner, because literally within days, guys, not so long ago, just Thursday, Janet Yellen was given a statement how there is no systemic risk. SIVB is just a little glimpse. Everything is fine. Everything is good. And literally within last 72 hours, we went from no systemic risk to now, hey, what's this? Regulators closed New York's Signature Bank, citing what? Systemic risk. And of course, if you try to read this, I mean, they think we're like totally stupid or something. I mean, this is absolutely incredible. Just read what Federal Reserve is saying. Like, it's lost all of its credibility. Nobody's going to believe a fucking word that's coming out of their mouth. It is absolutely fucking ridiculous. So look at this. Today, and this is March 12th, we're taking decisive action to protect U.S. economy by strengthening public confidence in our banking system. Really? If the economy is so strong, do you even fucking have to worry about it? You have engineered this insane, unrealistic number, okay, by modifying fucking job report numbers for years to make the shit look good. 3.4, 3.6%. We got bank failures happening right and left, okay? Guys, how can anybody reading this shit even how can you put this in one sentence? I understand if you're a first grader, but they absolutely think the American public are total fucking idiots. We're taking decisive actions to protect U.S. economy by strengthening public confidence? How can you fucking do that after you've been printing money for 50 fucking years? Fed facility will offer loans up to 1 year, okay, and so on. And basically it all boils down to the Treasury Department is providing $25 billion. It's providing $25 billion in exchange stabilization fund. I don't care how the hell you call it. This is just another name for a bailout. Yet, okay, they're saying there is no bailout. So it's in black and white right here. There would be no bailouts. And here, in paragraph 5, we're providing $25 billion. How can this, they think we have lost our mind or something? Like nobody can even read or write anymore? Like how can these sentences all together, they don't make any fucking sense. Okay, let's just give it another name. Let's not call it the bailout. Let's just call it Exchange Stabilization Fund. It doesn't matter what the fuck you call it. It's a bailout. Okay? It's a fucking bailout. Which takes me to the next most important point of this video, and that is, back in 2008, Federal Reserve didn't jump in to just rescue a bunch of banks, okay? As a matter of fact, when all the spiral down began happening, nobody cared. Hey, everything was fine, everything was contained. Nobody was jumping in on the first bank that failed and said, hey, let me bail you out, guys. Okay, but the fact at the speed of which the Federal Reserve is stepping up and saying, hey, we got to stop this now. We can't let this, okay, unravel. If you study any historical circumstances, the Fed has been very slow to address some circumstances like this. So the probability of a bailout surfacing like this fast was highly, highly unlikely. Okay, but the fact that they're calling it another name, trying to masquerade it under different sauce, that doesn't make the matter any worse. I mean, they can fool probably an average person who's clueless about the markets, but this says basically here, black and white, Federal Reserve fully admits it has officially fucked up. And they're saying here in this very message that they're ready to bail out every bank that's about to fail. And the fact that they're reacting to this failure so rapidly tells us that the situation is not bad. It is not bad. It's really, really, really fucking bad. And for that reason, okay, you don't go buy the market, because a lot of you are watching futures right now and you're like, Leo, but the market is pumping. What did I say in the last video? Any bounce in this market is a short seller's gift. It's a beautiful opportunity for you to short the bounce. When the market bounces in any given moment this week, what do? You short the fuck out of the market. Okay, because only a complete idiot can say, well, look, we got a bank. It's only 16th biggest bank in the country. It's only 200 billion. There ain't nothing that we can't just go and print. And hey, we're gonna give things some new names, but it's the same bullshit. Okay, the bottom line is, okay, this is just the beginning. You cannot be ignoring this. Okay, you cannot be reading these controversial statements in the same sentence blindly. Okay. The Fed is in a checkmate. It is a checkmate situation. There is no way out of it, guys. And with that said, part in this statement is just absolutely absurd. Okay, so basically they're saying, look, this is not a bailout. We're going to offer loans up to 1 year to banks. Okay, but notice they're saying they're going to this is the most sarcastic part of this right here. They're going to offer loans, okay, to the failing banks in as long as they provide what they call high quality collateral. Now, look what they call a high quality collateral. High quality collateral such as treasuries. Okay, it's the very fact, okay, that SIVB Bank couldn't liquidate their fucking treasuries. They bought long-term treasuries. So much for invest in the long-term bullshit, okay? They bought so much of these fucking treasuries. They were so stupid, SIVB Bank, so fucking stupid to go and buy a bunch of these treasuries, right? Why? Because they considered to be safe. Well, they're so safe, okay? They're so fucking high quality that when the time came to unwind some of these assets, they couldn't unwind them to nowhere near the fucking price that they paid for them because of these high rocketing interest rates that damaged the value of the bonds that they paid for. So how ridiculous is this for them to say that they will accept the very collateral that basically crushed this fucking bank? This is sarcasm at its best. There's so many controversial statements. You cannot be a human being with a brain. You can't even be a human being with half a brain and not to be completely repelled by the fact that the Federal Reserve System in the United States thinks that everyone is a fucking idiot. With that, there's some easy trades to be made. Okay, the number one easy trade is you go and you buy a bunch of Bitcoin. Okay, BTC is a bullish fuck. I wouldn't be shocked if Bitcoin fucking doubled in the next month or two. I wouldn't be shocked if Bitcoin doubled in the next few days. Guys, okay, United States dollar, USD, is going to fucking collapse. And by collapse, it's not like USD is going to drop by, 50%. What I'm saying, a collapse in USD, the term collapse means that something loses the value rapidly. Consider the historic norm. I mean, USD has never collapsed. Ridiculously, like some of the other currencies back in Germany during the hyperinflation days, like in Austria, like in Hungary, like in Africa, all these countries that printed a shitload of money, they paid a huge price. Now, a colossal drop like in USD in relation to some other currencies would be like a 20-30% drop. 20-30% drop, guys. This system is going to collapse. I mean, this is, okay, we're finally at a point where the United States can't print money freely, okay? There's trends of major countries that are unloading United States treasuries for the last couple of years. Now, they cannot clearly unload them at free will because they're still doing huge trade with the United States. The top countries are holding United States treasuries are number one, Japan, out of the roughly 25 trillion in United States government debt. Okay, Japan holds 20% of that. Okay, so if you want an easy trade, guys, we're shorting the hell out of Japan, and the chart looks highly lucrative. Okay, Japan is already in a lot of trouble, but if USD drops 20-30%, okay, Japan holds 20% of United States government debt. Japan will be fucked. Okay, so let me show you how the chart looks real quick. Okay, so here's a chart of Japan, guys. Black candle, you know what black candles mean, so this is perfect time. We're close to the top. It trades at about 28,143 at the time I'm recording this video, guys. Look, this thing can collapse. I mean, this Japanese stock market could collapse beyond the norm. I mean, I could see this thing dropping all the way, guys, to maybe 15, 18,000. It wouldn't even be a shocker. And I'm not saying it's just going to collapse out all of a sudden tomorrow. I'm saying as United States dollar drops, okay, this chart is ugly as hell, okay? If you care to understand it, okay, sign up at 13 Market Moves. Get with a coach. We'll explain you this chart. We'll walk you exactly how you can short Japanese market right now. Right now. And you can make a ton of money over the course of the next 30 to 60 days. 30 to 60 days, guys, okay? There are plenty of you just with this trade going to pay for their house. And while the rest of the world is screaming recession, they can't pull money out of the bank, okay, you'll be able to take care of your stuff. You'll be able to take care of your family by understanding this simple chart. So easy trades, again, Bitcoin calls, Bitcoin, okay, could double. Japanese market could collapse, all right? Some of the other countries that are already having trouble, and I've been mentioning in a lot of videos, is the market in China. And of course, by definition, they have to be buying a lot of U.S. treasuries. Now, they're not buying all long-term treasuries, which was the move that was made by SIVB Bank, but in any case, Silicon Valley has made a couple of mistakes, but China is in a bind. It's been unloading treasuries. It's currently the number 2 holder of United States treasuries. Basically what I'm saying, United States treasuries, they were considered to be a safe investment for many years, but with the current shift in policy, okay, these things are worthless, okay? The Federal Reserve System has done so much damage to its reputation, so much damage to like anyone that holds a bunch of these things, they're gonna suffer. So Japan is our suspect number 1. easy trade on futures. So make sure your account is set up to short Japan utilizing our future strategy at 13 Market Moves, guys. Don't miss this huge trade. Sign up today. Now, Bitcoin, guys, you know Bitcoin, we trade on Phemex. If you use the link below somewhere in this video, if you want to trade with our group on Phemex, guys, you can put some colossal trades without any restrictions that a lot of our other exchanges have. Trade 13 Market Move style at Phemex. Click the link below or contact us at 13 Market Moves to make sure you get your account set up fast. It literally could take 10 minutes and you could be trading this colossal trade with us, increasing your Bitcoin holdings substantially. You want to trade with our group, make sure, okay, you know, if you're not trying to make just a couple of bucks, if you're trying to really do something meaningful, okay, this is a beautiful chart. I think it's going to fly above that 22.9 level, and I think it's going to go way higher. I mean, we sent out the alert earlier today when it was at 21K. We're up 1,500 points so far in the trade, but I think this is very inning of the trade. I mean, we could be going way higher. I wouldn't be shocked if Bitcoin was at 30, 40,000, literally like in the next couple of weeks, in the next month. So we're going to see some major shifts in the market. Federal Reserve meeting is coming up, and that could be huge, but I don't think anything at this point as far as next trade could stop this thing from collapsing out, and that is the price of oil. You know, we have been short on oil for the last month, 2 months since the beginning of the year. We have caught some incredible trades on trading options on oil futures, guys. If you have not done that yet, you're missing out some killer trades. I mean, this is a highly bearish chart in an environment where every institutional banker is so fucking bullish on this thing. It is a shame not to short it given current market conditions, okay? On any kind of bailout stimulus, this thing normally would be going higher, but it's only a short-term bounce. If you see a short-term bounce in oil, you short it. Any bounce in oil is a gift, okay? The next trade, guys, that is hugely, like, I can't even believe that it has not even gone up $100 yet today. And in the last video, I mentioned how we put a colossal 24x trade on gold. But at this point, I don't think this trade is going to stop. I think personally can rocket to this 1975 level where we accurately shorted it. We shorted gold right here at we started shorting at 1930, 1940, 1950, 1972. Basically, we've nailed the top, and we've capitalized on this huge move lower. In last video, I pointed out how we are totally bulls on gold, and I wouldn't be shocked if we could get to this level of 1975 very rapidly. So what we want to be doing is buying any pullback in gold, guys. And if you don't know how to capitalize on trading gold futures, guys, make sure you get in touch with the coach here at 13 Market Moves. Set up your account correctly, because these sort of opportunities where normal things move in an abnormal way to where your expansion of moves happens practically in every asset class, it doesn't happen very often. So when it does, pay attention to it, have your account set up correctly, because some of these trades, I mean, it could be colossal, guys. Don't miss these opportunities. So this is just in general, but I'll give you one more that I mentioned, how China is exposed to U.S. treasuries, how China is already experiencing slowdown, how China reopening is not going as planned, which was our basic strategy for trading China. Over the last couple of months, we've been telling you when Chinese stocks were bouncing and the whole Wall Street was so highly bullish, and then we told you to short them because we knew that bounce, for example, in stocks like BABA, it wasn't going to last, okay? So when they were being highly bullish, you can go back a month and a half and a review when I posted the video on BABA when it was exactly at $119. Well, since then, the stock is down, what is that, over 30-40%. The other one, is going to experience a much bigger drop over the course of next 30 days. It's been playing around. We had some successful trades on both puts and calls, but overall, I think it's ready to break down. We got a quadra top at this point, resemblance of a tornado pattern. This stock can collapse at any given moment, but these stocks are relating to a Chinese sector. But there is a stock I'm going to present to you, because if you're part of the paying member of the alert group, you would have known that about a week ago, I have specifically identified the sectors that we're shorting. And within those sectors were the industrials. Now, if you look at the industrials, all of a sudden, all of them are tanking like crazy. If we take a look at Caterpillar, which recently they've been buying up like crazy. But look what happened since I've posted that note in the alerts. All of these industrial type stocks, they're tanking. And if you take a look at even Wall Street's favorite recently, after great earnings, what happens to DE? Well, DE shoots up higher. So that was the moment when DE moves higher in earnings, and since then it does nothing until they just really start selling it in the last couple of days. I have a stock for you guys that have both Chinese and industrial exposure, which is CMI. CMI is Diesel Cummins. It is a US-based company, but majority of its sales actually derive from China. And it's got a beautiful pattern. I think we're going to go way lower on CMI. That is an easy short. If you don't know which strikes to get, how to trade these guys, I would say don't even fucking dare trade it without a 13 market moves coach, because there is a chance you're going to jump at the bad time. You're going to freak out if the stock bounces against you. You're going to basically fuck up a really good trade. So in order for you to avoid messing up a really good trade, make sure you go to 13marketmoves.com or 13mmtv.com and sign up to get this done. All right, so next point of this video is there's a ton of trades. There's a ton of big moves in the market. The way things are priced right now, they're starting to get pricey. The market could expand the move. I have mentioned in the last few videos that a move expansion was way overdue. And this is exactly what's happening. So we've nailed the big drop, the 5-day drop right here, which was not big from the standpoint of the daily moves. And we've pointed out that the move expansion was about to take place. And so right about when I pointed the video, market actually bounced a little bit. But if you kept that strategy together and intact, you would have been able to short that bounce, which we're able to do perfectly, and capture this expansion of the move that took us from 4,070 level basically all the way down to 3,870. So that paid nicely. All you had to do was stick with the strategy and not overreact to the bounces. Just as you're probably overreacting to the bounces, looking at the futures right now, saying, Leo, oh my God, it's a bailout. They're gonna run this market higher, guys. These market conditions are totally different from what we're used to. Okay, let me attempt to draw this for you to get the point across. Okay, guys, so officially 1971, United States gets off gold standard, okay? Technically, it's 1933, but we don't have time in that for this video. You have United States printing money, printing money, printing money. And in recent years, okay, the amount of printing is doing more like this. I mean, we're just like a Bitcoin chart going from 20,000 to 69,000, right? So it's the rate of change. So the term would be ROC, rate of change. The markets, they're not about where interest rates are going lower, interest rates going higher. Most of the people tend to focus on that. But really, the most important thing that moves the markets short term that you got to pay attention to as a trader that makes you a ton of money is the ROC. It's the rate of change, okay? And if you basically focus on what's going on, okay, so United States keeps printing money, printing money, printing money, and the rate of change in how much money it prints literally skyrockets in the last few years. At the same time, the rates, which are from 1980s, right? 1980s. Let's take 1980s. I mean, the rates basically 1980s, 1979. That's when they really started climbing. 1980s. I mean, rates hit like 18%. So sometimes you're gonna be like, okay, we're like at 4-5% now. I mean, who cares, right? In the 80s, we're at 18%. Well, it's the speed of the rate increase that caused major recessions between 1980 and 1983. Okay, and so from there, the rates started dropping. Okay, and they've been dropping ever since, all the way to recent environment where, we're in 2015, 2020, 2021. Basically, there's not much room to lower them anymore. And so the rates are just stalling, almost going negatively. And again, the thing to look out for is the rock, the rate of change. So if we're going to go increase the rates slowly, all right, we can drag this environment out just like we were dropping rates since 1980s all the way to now. And of course, there were periods in time when rates go up, they go down. The point is, nothing collapses. There's no systemic collapses when things are balanced out. But when the rate of change, the rock, is increasing in a crazy fashion, like when you go from printing money for a long amount of time, and the rate of printing money is increasing at rapid speeds never seen before, and when you go from a very low interest rate environment to basically no interest rates, zero interest, almost negative interest rates at some parts of the world, okay, to all of a sudden, if we went up just like this, right, I mean, it would have been okay. But no, the speed of rate in the way interest rates are in interest rates expectation, when we're doing this, when we're going from this to this, okay, that's what creates a systemic risk. And that's what basically, it's not SIVB, okay, SIVB, okay, yeah, they were idiots for trusting the Fed. That's the only thing we can blame them for. Silicon Valley Bank. They're like, yeah, we welcome a lot of crypto firms, but we believe in the Fed. If these motherfuckers would have just bought Bitcoin, they would have been way better off. Okay, because for as long as they've been around, I mean, damn. But listen, that's a whole nother subject for a whole nother video. But let's just focus on this. So, in Fed, we trust, basically says Silicon Valley Bank, ticker SIVB. That's why I call it SIVB. And basically, in Fed, we trust. And at this point, okay, after this magnificent collapse, I don't think many people are going to trust in the Fed. It's not like many people trusted in the Fed to begin with. But when you combine the rock, the rate of change at which the Fed has been printing money, especially in a recent time frame, you combine it with the rate of change at which the Fed has been raising interest rate, okay, you will get this in a lot of things, okay? The only thing that's actually going to do this is the fucking unemployment rate, which we talked about had a first official uptick, which you can't even trust these numbers, okay? So we went from 3.4 official lowest unemployment rate to 3.6 in the recent job report, okay, which is very odd because how do you add these fucking numbers, okay? We're expecting to add 220,000 jobs and we added 300,000 jobs, and yet the unemployment rate went up. Okay. More numbers that don't make sense, more numbers that are highly fucking contradictory, okay? The problem with all these numbers, and the problem with an average trader trying to figure out what the fuck is happening every day, is the fact that all of these numbers have delay effect, okay? Next time around, they're going to be saying, well, actually, no, the unemployment didn't go from 3.4 to 3.6. It actually went from 3.4 to 4.1. And this number was revisited from 300 job creation to negative 100,000 jobs. Like, don't be shocked if you get some stupid number like that. And that gives the Fed to actually say, well, we didn't see this coming. No shit, you didn't see this coming. You print fucking money for 50 years. You print more money than you've ever printed in the prior 45 years, in the last 5 years. You increase the rate as if it's a fucking Bitcoin chart, and you don't see a problem coming? Seriously. What the damage has been done. There's nothing that can stop this at this point. The question is, if you're smart enough and you got your own brain, how do you trade it? I invite you to come and trade with us at 13 Market Moves. You know, we're in the goal to take 44 guys from basically nothing, 5, 50K, 100K to $1 million plus in the next 10 months, guys. There's going to be those 44 millionaires made. Some of them are going to go to 5 mil, 10 mil, 50 mil, and you're going to hear a lot of success stories. Not every year do we have an environment like this to where things are just beyond pure stupidity. And if you're just able to see for some of those things, you stand a chance to make a lot of money. Just don't repeat some of the mistakes that some of the traders make when they sign up to trade with us. And the number one mistake, guys, is this. Well, Leo, I want to manage my risk. I don't want to be putting out $50,000 in a trade. I want to only put $5,000. Okay, who wants to put $5,000 in a trade and limit their risk when the world is on the verge of a fucking collapse? Okay, yes, things have delay effect in the market. Yes, you generally want to be safe and you want to manage your risk and you want to do all these sort of things as a trader. But in the next video, I will specifically point out to you some of the greatest, wealthiest people in the world, including Warren Buffett, okay, that pretty much admit the reason why they made the money, it is not because they've put together thousands and thousands and thousands of successful business deals or successful trades. It is because they just managed to find a few great fucking trades and they put a bunch of money in those trades. I will give you a few examples in the next video, guys, but the point is, I don't want you to miss some of the greatest trading opportunities in not so distant future. I don't want you to look back at 2023 and say, man, I could have been one of those 44 guys. I could have traded with Leo. Okay, this doesn't get any easier. Okay, the Fed is trying to take advantage of an average American person who's probably just busy running around, taking care of their family, taking care of their business. Okay, they're trying to take advantage of a person who's absolutely blind because they are a part of a system that is designed to make an average person fail. So if you think, you know, you're sick and tired of that shit, you want to be free, you want to be a free man, you want to have your shit paid for, you don't want to be dependent on nobody, okay, I am saying that you have an opportunity to do so. You have an opportunity to set yourself free. Okay, you don't have to be the slave of the system. Okay, and it doesn't matter whether you're fucking white, black, Asian. I don't give a shit. I see no color. Okay, all I see if somebody has a brain or not. So I invite you to trade with 13 Market Moves. If you think you're destined for greatness, this is your fucking moment. Okay, the Fed is calling you stupid. And within that lies an opportunity to put some highly profitable trades. The only question is, will you do it? And if the answer is yes, do it with us. Do it with me at 13 Market Moves. Sign up today and let's roll. Trading wins and losses is just like everything else in life that is worth fighting for. You remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business,
thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit. But you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 market moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time, fearlessly using the 13 market moves formula today.